Gold price $2,000, driven by OTC inflows, not ETFs or Comex specs. Gold prices rallied from their deepest dip below $2,000 in 2 weeks on Tuesday, defying weak gold ETF trust fund flows as global stock markets rose on better-than-expected GDP data from China. The world's second-largest economy expanded by 4.5% per year in the first 3 months of 2023, just below the communist dictatorship's new target of around 5%, but above consensus forecasts for Q1 of 4.0%. Gold prices in Shanghai today slipped for a second session in Yuan terms, but extended their premium over global quotes for London settlement towards $7.75 per ounce, the highest in a week, and back in line with the typical incentive for new imports of bullion into gold's #1 consumer nation. Monday's drop in dollar gold prices to $1,981 per ounce saw giant gold ETF the SPDR Gold Trust shrink by 0.2%, reaching its smallest size since in 3 weeks. Smaller competitor the iShares product expanded, in contrast, as did the third and fourth largest North America-listed ETF gold price trackers, the Sprott Physical Gold Trust and the SPDR Mini Shares product. Together, however, those for gold ETFs have now expanded by only 0.4% since end October, when gold prices hit 31-month lows before rising 21.7% to Monday's London close. Given what gold has achieved in 2023 in the face of much larger macro headwinds and the lack of a frenzied bid from Comex speculators, Comer, says strategist Nikki Shields at Swiss Bullion Refining and Finance Group MKS PAMP, our suspicion is that physical demand, stemming from both retail and central banks as well as unknown flows, is the key differentiator now, versus gold's 3 previous pops above $2,000 per ounce. On Shields' analysis of the available data, gold inflows from central banks and investment funds should have driven gold prices up 4.4% year-to-date. So gold's 10% rise since New Year offers substantiation that large bar demand in the wholesale over-the-counter market is driving price action. In contrast to untracked OTC investment demand, the GLD Gold ETF, which costs 0.40% in annual management fees, has shrunk by 2.0 tons so far in April, while the IAU, 0.25%, has expanded by 6.2 tons, with Sprott, 0.35%, growing 0.7 tons, and the Mini Shares product, 0.10%, up by 2.1 tons. Since their respective all-time peaks, the GLD has now shrunk by 31.5% and the IAU by 15.7%, while PHYS and the GLDM have expanded to lifetime records. With spot gold bullion prices dipping back to $1,999 early Tuesday afternoon in London, silver prices also held lower for the week so far following the past month's steep gains, trading just 10 cents above $25, down by $1 per ounce from Friday morning's fresh 12-month high.